What's up, everyone? This is Nick with TradeSpace.io. I want to make a quick video today just talking about uh, market analysis for the ES in this upcoming week. If you work with me one-on-one at all, then you have free access to the Discord where I post a weekly watch list each week. And this week I just decided to do it in video form to give some people some better examples. So we've been doing this analysis each week for many months now. So we're going to start from about where we left off last time, and that is the 5,000 magnet. So before I mentioned during our trending phase when we were in here that 5,000 would likely act as a magnet soon. And that's exactly what happened. We came down and we tested the 5,000 magnet. After the 5,000 magnet test, we had a tight bear channel here, and it was reasonable to think that we might have another strong leg down from this tight channel. However, you have to keep in mind that we're likely in some form of a range. And if that's the case, then the chances of low one failing after a tight bear trend is a lot greater. The probabilities are reduced quite a bit. So we have this tight bear channel. We have low one failure, low two at the moving average. Once again, failure. When this low two fails, it can really trap bears and produce a pretty good bull rally, and that's exactly what happened. As soon as we broke this previous high here, bears were trapped and they did not sell again for 1, 2, 3, 4, 5, 6, 7, 8 bars. And even then, our bear bars are relatively small. We had this tight trading range right here. When you have a tight trading range late in a trend, then it might be a final flag. And that's exactly what it was here. If you're in the group already, you would have known that we were likely going to test the moving average. That's exactly what we did. We came down, tested the moving average. For a second there, it looked like bears were going to get a strong break. We had a bear bar here closing below the moving average. We started to have a bear bar here closing below the moving average too. However, in the final hours of Friday, the market reversed up and formed a pretty big bull bar. I think my biggest complaint about this bar really is just that it's an outside bar. So it does increase the odds of more sideways action. But if you look to the left, you see a good trend here. Nice tight trend with many bull bars in a row, many gaps. And then you see this final flag area where even though the bears got some downside, it was relatively limited. Even though this is an outside bar, and normally if you have an outside bar as your entry bar and your signal bar is something like this bear bar, then it would be more likely to lead to ranging action. And that is a reasonable thought too. But this ranging action is mostly bullish, so if anything, it's more, I guess, logical to think that if anything, we're going to go up to sideways instead of down. So just kind of keep that in mind when you are trading. There's almost definitely sellers at these all-time highs here. If you're a bear, then you're looking at this, and you probably are okay with another leg up. So if you get another leg up, you know there's sellers above here. You know that it's relatively easy to scale in. If you're a bear and you sold here, then you can sell here again. You would have made money. There's another leg up and it's small. Maybe you can sell again up here, and you can wait for the first pullback and you'll likely make money. The bears could potentially also see a wedge right here, a 1, 2, and one more leg up, might be a 3, which may put our, we'll just kind of have to see what it looks like, because it may be a very weak wedge, but it could put us down here or down here, depending on the size and the strength of the wedge. This last leg up will determine a lot of that. So the bears want to wait to sell, relatively speaking. If you're a bull, then you have the odds in your favor. With that being said, though, anytime we've been trading in here as bulls or bears, or specifically as bulls, though, the odds have never been the same as when they were back here when we were in this really tight channel and we were trending. It's very hard to lose money in here. A little bit easier to lose money in here. And now it's going to get to be a little bit more harder just because it's going to go a little bit more sideways. So what to watch for this week? Well, this week, if you're a bull, bulls want to reach new all-time highs and they want to get strong closes above the previous high here. Strong closes into all-time highs. Bears, they want to see a wedge 1, 2, and then 3 somewhere up here. They want to have a lot of strength with this wedge because they want to push the market down further. Now, if we zoom way out, we look at the market. Let's get rid of our lines here. We zoom way out and we look at the market. It's going to do some adjustments here. If we draw a channel like this, we can draw it like that. That's fine for now. You can see this channel is a lot tighter. A whole lot tighter. In fact, I can maybe create a little bit better visual. It's a very tight channel in here. Once we broke this and tested 5,000, it created a broader channel here. So right now, we're essentially in both a range, right? Because we have range here, top and bottom. I'll mark those real fast. Ranging in here. Bottom of the range somewhere over in here. I don't know if we're going to come back to this bottom yet or not, although this 5,000 level is important to keep in mind. The further on we go, the higher we go, the less likely we are going to come down and retest this 5,000 level. However, it's still good to keep in the back of your mind that we might one day. So you can look at this as a range, and it is an appropriate range here. It's kind of small. You can also look at this. If you zoom way out, the overall context is a broad channel. Go ahead and get rid of this. With the overall context being a broad channel, what are some things that we can look for? Well, deeper pullbacks, limited upside. Certainly two key things in a broad channel. Lots of tests and retests of moving averages, of trend lines, of previous breakouts, etc. Bears will be more likely to scale into trades, so they're more likely to be okay if they sell here and then sell again here because they know that the pullbacks will be deep enough and they can likely make money or get out break even. So you're going to have a lot more selling action happening, which obviously will create a little bit deeper pullbacks, and it'll create more sideways action within the channel too, because you're going to have both bulls and bears scaling in. Just as an example here, if a bear sold here, he can make money. If he sold again here, if he didn't take his profits in here and he sold again here, he can make even more money. If he sold again up here, he can likely eventually make even more money. Bulls are doing the same thing. We have a tight bull channel here and a final flag. Push down below the moving average failed. Bulls who bought all through here, all in here, even a bull who bought the absolute high here, can buy more here, scale in lower, and he will greatly increase the odds that he'll make money. So both sides can scale in and really increase the chances that they'll make not just a little bit of money, but quite a bit once they scale in a couple of times. So it's important to remember that. So as a few things to look out for this week, if you're a day trader, then you want to have a mostly bullish bias. You should realize that it's likely the bigger moves are going to come from the bulls because we're likely going to get a leg up and a test of these all-time highs. I think we're probably going to get to new all-time highs before we find sellers again. But there's almost definitely some up here somewhere. Bulls are going to have more strength than the bears, so it's generally best if you see a really good bullish setup to go ahead and just take it. Especially if you think that might end up leading to a trend, because it's got a higher probability of leading to a trend for bulls than it does for bears. If you're trading on the daily chart here, then now wouldn't be a bad time to be in the market here. You have a pretty definitive stop loss. If you're not afraid to scale into a trade, then the odds of you making money is just even higher. So that's pretty much it. Just a quick little analysis. If you're in my Discord, if you work with me one-on-one, you do get free access to analysis like this each and every week, as well as analysis from all sorts of things, really. I post all sorts of resources in there, whether it be quantitative analysis, price action analysis, market psychology. There's a whole treasure trove of very cool things in the Discord, actually. So if you're interested, then I'll leave a link below where you can contact me on Fiverr for the one-on-one coaching lessons. And hope you enjoyed this analysis, and best of luck trading to everyone this week.